When a private company goes public, its value suddenly becomes real in a way it never was before. That moment of truth is happening to SpaceX, and the numbers are staggering. But the trillion-dollar question isn't about Elon Musk's net worth. It's about what SpaceX's technology is actually worth and how we calculate it. Think of a company valuation like estimating the price of a house. You don't just guess. You look at what similar houses sold for, what the land is worth, what improvements exist, and what future buyers might pay. For SpaceX, the math is more complex because the company operates in multiple markets with different growth curves. When SpaceX IPOs, the company's equity gets divided into shares, and investors bid on those shares. That demand determines the stock price. If SpaceX goes public at a valuation that values the entire company at, say, $200 billion or higher, and if Musk owns roughly 30 to 40% of it, his personal net worth crosses $1 trillion. But here's what matters from a tech perspective: that valuation reflects what the market thinks the company's future cash flows are worth. SpaceX has three revenue streams. First, Starshield provides satellite internet with thousands of active satellites already in orbit generating subscription revenue. The constellation uses phased array antennas that electronically steer signals without moving parts, a technology that scales with minimal additional hardware. Second, commercial cargo and crew launches to the International Space Station operate on government contracts with predictable cash flows. Third, national security launches for the Department of Defense and Space Force generate classified but substantial contracts. The valuation multiplier depends on profit margins and growth projections. Starlink satellite internet competes with terrestrial fiber, so margins compress where fiber exists but remain high in rural areas. Launch costs have fallen because Falcon 9 rockets land themselves in Reveille, reducing per launch cost from $10,000 per kilogram to under $1,500. That unit economics improvement is the real driver of valuation. Reusable rocket technology changed the economics fundamentally. Historically, rockets were single-use, making each launch expensive. SpaceX's landing legs and autonomous guidance systems let engineers refurbish and relaunch boosters dozens of times. That engineering achievement created the margin expansion that justifies the billion-dollar valuation. When SpaceX IPOs and Musk's wealth crosses $1 trillion, you're seeing the market price a bet on sustained margins in satellite internet and reusable launch technology. The technology had to work first. The valuation follows. If you want to understand how reusable rockets actually land themselves, the guidance system breakdown is already on the channel.